What's up? Are you a money magnet? You're darn right you are. Did you have a good holiday, good 4th of July? You did? That's good. I'm glad to hear that. I'm glad you're safe. I'm glad you're here today. So we have a new week coming up, a new week for trading, new opportunities to be money magnets, to practice and get better. And the SPY is at new all-time highs. The previous all-time high was around 613-ish. $13 later, we have a new all-time high around 626-ish. Incredible. So today I wanted to identify some trade ideas using the charts, trade ideas that we can possibly look out for this week in hopes to attract some money into our trading account and turn our P&L green. And you notice we had a gap up last Thursday. Nothing on Friday, 4th of July, Independence Day, but we had a gap up and I'm watching that gap up. Very important we watch this gap up this week. 620.5 up to 622.4. We'll round it to 0.5. 620.5 to 620.5. That $2 gap. This gap is going to tell me whether I should be bullish or bearish or not this week. Above it, 622.5. If the price action, do not go for a gap fill, whether it's an attempt or a successful one, it's a good sign. SPY will continue to be irrational and push up higher to new all-time highs. Every time somebody thought it was the top, SPY continued to push up to new all-time. We had an inside candle setup last week. We had the breakout last Wednesday, and it showed follow through to new all-time high. I will say it is pretty risky. We're at new all-time high. RSI is very overbought. It's pretty risky to go long right now. I will say it's not really the area you want to go bet into the upside. Can it continue to go up? Absolutely. And if the setup presents itself, I will play it level to level and bet to the upside. For me to bet to the upside though, I must figure out what levels to watch. The level I'm watching is 625 and 622.3 because that was the high of last Thursday's candle. If we can stay above the gap fill area, stay above 622.5, clear 625 and 626.3, it's a good chance we're going to continue to new all-time high. And if I zoom out, I have my Fibonacci levels from previous all-time high back in February 19th down to April 7th low. And you can see the next Fibonacci level, fib extension level is all the way at 644.25. We broke out the previous all-time high way back in late June. So from this perspective, as long as above late June's breakout, 613, 644 is in play. But I am a short-term trader because I love to day trade level to level style. And in the short term, I need to see 625 and 626.3 clear to head to new levels. But once again, I must stress that usually if we go for a gap fill and it breaks down 620.5, fails as support, there's a great chance that we're going to get a big pullback, maybe even rug pull style, elevator down. The setup is there. Very overbought RSI, my Bollinger Band, we're overextended on the upper Bollinger Band. The setup is there. But just because the setup is there, don't mean we just assume and jump ahead. We watch that setup, but we must watch for the trigger of that setup, and that would be the loss of both 622.5 and 620.5. We can even count 619 because that was the mother candle's high that we broke out of. So below 619 would give us a false breakout setup of that setup, the inside candle. So in conclusion, to be bearish, 622.5, 620.5 and loss of the 619 level would be your sign to go bearish. Now I want to give us a reminder on how to use these levels. How does Unco use these levels? I use the 15-minute chart. I identify the levels that I'm using and I add them to my 15-minute chart based on the daily candle. Now last Thursday I was using the 623 level. I'm not using it for this week, but I was using it last week, and I wrote in my Discord, next resistance is at 623. If it clears, new all-time highs incoming. And once it cleared, I let my group know 623 cleared. I have no levels above, but I told them to take profit every 1.2 to $2 move. And eventually in my next post, I mentioned that we want to take profit around 625 area, and we can see that it worked out beautifully when it cleared my level right here on the 15-minute chart where I'm showing you guys. Cleared it, closed above 623, and it led to more upside. And it's the same approach if it breaks down a support level. We breaks down and close below it, that's when we want to go short. So that's an example of how to use the levels. Watch for the breakout or the breakdown of the pivot levels, and I gave you guys the pivot levels based on the daily chart. When we move on to triple Q, looking at a 6-hour chart, we look at the daily chart. Big body green candle to the upside. I do have levels at 555.5, 554, 552, and 550. Those are the levels that must fail. We are pretty overextended. The setup is there for a pullback. Below 550, I would be bear bias in favor of a deeper pullback. The reason is that's a fib level, but also it's below my 5 daily moving average. I like to use moving average. I don't mention them all the time, but I do use them. And below the 5 DMA daily moving average is a good start for bears. They need the breakdown of 550. But before we get there, 555.5, 554, 552, and then 550. One level at a time, one setup at a time. But if we manage to stay above 555.5 and we clear 557, new all-time high is coming. I don't recommend us arguing against the price action. If you're ever in a situation where you think it's just ridiculous, like this price action is just ridiculous, I know it's going up, but you don't feel comfortable betting to the upside, it's okay to sit to the sideline and stay in cash position. Take the setup you're comfortable with. It's better to miss out on money than take a setup that you're not comfortable with and you're making decisions from a bad or a negative state of mind and then you end up losing money. I'd rather you just sit it out. So like I said, if we're above 555.5 and 557 clears, as ridiculous as it sounds, new all-time highs incoming, 560 plus. But the healthier thing I would think the market should do is pull back, and it doesn't have to do what I say. The market doesn't care what I say. But if it does pull back, 554, 552, and 550 are the levels to watch. Fair enough. Here is Tesla. Had a nice bounce the last couple of days after that massive gap down. Failed to recapture my 316.5 level though. That's the blue line right there. That level served. You can see from last Monday's low and last Wednesday's high. That area served as both a sell zone and a buy zone. So I was watching that pivot level. The bulls failed to recapture it. And I'm still watching that level. 316.5, 319, and 320.5 are the resistant levels that bears need to break above, at least on the 15-30 minute chart. Break above to get a bounce going. But as of right now, that is still looking bearish to me. So stay bear bias below 316.5. Loss of 315 and 313 would definitely send us lower down to 311 and 309.3. Now 309.3 is a fib level. Loss of that level would give me a good sign that we're going for the gap fill around the 300 area. That's a nice drop to the downside. So watch the pivot level. 316.5 is the equilibrium level. Above it, we can possibly get a bounce, but below it, no chance of a bounce. NVDA setting new records, new all-time highs. It closed around the 159.3-ish area. I mentioned the false breakdown setup when it recaptured 155, cleared 157. I mentioned as long as above that level, we want to stay bullish. It's showing a bit of upside follow through. So we're still watching to see if it can stay bullish. And for it to stay bullish, it needs to stay above the 159 level and clear 161 next, and then we can head up to new all-time highs. I have a Fibonacci extension level all the way up at 168.7. Still a ways away, but only possible to test if we stay above 159 and clear 161. Because if we break down 159, that would invalidate last Thursday's breakout, and that will put 157 gap fill in play, and below 155 and 153 we can expect a much bigger pullback. But overall, as ridiculous as it's looking, still overall bullish. We need the right price action setup / trigger to go short. I know there is a bit of a divergence here. You can see this high right here, and then we have the RSI down here, and then we see this pivot high from last Thursday, how it's higher than the high from last week, and yet the RSI is not higher than the RSI from last week. There is a divergence here. It needs to get corrected, but it will only get corrected when the price action says it will. Loss of 157, 155, 153 says we are going to correct this divergence, but if above it, market makers may have other plans, and it's on us to follow through. Coin is still trying to go for the bounce. It did stay above the fib level around 348.6-ish, and it closed around 355.8, so it also, managed to stay above the 350 level. Bullish follow through would be to clear 358, 360, and the fib level at 361.4. If that happens, we are bullish. I would expect another $10-15 bounce to the upside, maybe higher. But if we are to get bearish, I need to see 350 and 348.6 fail. If they do, I would expect a $15 to $20 move to the downside. That would be beautiful. And last but not least, here is IWM, also looking bullish, continuing to clear fib levels. The next fib level I have is at 223. It closed right around that area. If it can get above 223, 225, and 227 plus are in play. But if we are to get a pullback, we have to look at the last level that IWM cleared. What was the last level that IWM cleared? Well, that would be the 1.618 fib level at 221.5 and also 220. I need to see both those levels break back down to invalidate last week's breakout, and that's our sign that we can get a pullback down to 218 and maybe retest the 200 daily moving average, which is around 216. And obviously below 216 will be extremely bearish because we break back below the 200 DMA. Only possible if we break down 221.5 and 220. Otherwise, if we clear 223, we're heading up higher. Remember, y'all, you are money magnets, and money magnets do not argue with the price action. Bah!